All right, everybody. Happy Monday. It is May 23rd, 2022. It is about 8:53 p.m. Eastern Standard Time. Well, tonight we're going to be talking about Zoom video. Obviously, everybody probably knows what Zoom video communications is, as we've been working remote throughout this pandemic. But if we remember correctly, Zoom, ticker symbol ZM, has been an extremely high flyer in terms of the stock through 2020 and 2021. But as the Federal Reserve started raising interest rates, as the economy has been slowing, and as Zoom has been going up against some pretty tough comps or their comparables, the stock price has cratered, down about 85% from its all-time record high. They actually put up a pretty decent quarter. They beat on both the top and the bottom line. Earnings per share, or on an EPS basis, Zoom reported about $1.03, so $1.03 worth of EPS. Analysts on Wall Street were expecting 87 cents worth of EPS. Revenue actually came a slight beat, but I'm just going to call it in line at $1.07 billion. Now, here's what I talk about when I mean decelerating earnings. So essentially, if we think about the earnings growth that Zoom has had and the revenue growth that Zoom has had, they've essentially have had about 5 to 10 years worth of sales growth condensed into 2 years. So what that creates is a very, very hard environment to continue the pace of earnings and sales growth. So for example, I think a crazy statistic here is that for 5 straight quarters, so 5 quarters in a row, so back to back quarters, Zoom has posted triple-digit revenue growth each and every single quarter. Now they are growing at about 12% quarter over quarter, the year over year quarter. So just to give you guys an idea, revenue is up about 12% year over year. This same quarter last year, the year over year earnings, the year over year sales growth was about 200%. So as we know, the market in Wall Street is a forward-looking indicator. So the market is not willing to pay for extreme revenue growth when we are seeing decelerating revenue. Yeah, we could trade at a crazy multiple price to sales, price to earnings when the company is posting 600% EPS growth and 600% revenue growth. But that is not the case anymore. So we are seeing severe deceleration within the earnings and revenue growth, where I think things are going to stagnate a little bit. The CEO of Zoom came on the call and said they expect their revenue to continue to grow in the mid-teens year over year, which actually isn't bad. And I think that they're going to get the vast majority of their growth actually from acquisition. So we'll talk a little bit about that also. We will talk about Snapchat. Yes, ticker symbol SNAP. Their CEO, Evan Spiegel, actually came out and has announced that they are going to cut back on hiring because they've seen a severe deterioration in the macroeconomic outlook. So we'll talk about that as well. But first and foremost, everybody, let's see who we have in the chat. I see Matt. Mr. Ming is here. Good to see you, Mr. Ming. Says, what's up? Don SS says, hey. Sally says, hey. Tom Samantha R says, hey. Good to see you. Matt. Lucas is here, Savi is here, Samantha R says, how are you? I'm doing fantastic. A lot of pollen in the city. NNB045 says, hey Tom and happy Monday. Good to see you, NNB045. So everybody, we are sitting Central Park South overlooking the most beautiful Billionaires Row here. Right here you see 220 Central Park South. This is my personal favorite tower right here, Central Park Tower. I believe this is one of the newest additions to Billionaires Row. Fantastic building. So you guys are going to get a treat tonight to see a beautiful view. And we will touch on Zoom's earnings, and we will also talk a little bit about Snapchat and as to why a lot of these tech valuations are being crushed. Yes, Forever 18 says Zoom is a negative beta stock, which means the worse the COVID-19 is, the more the stock will grow. When COVID-19 is ending, Zoom stock will slide all the way down. It says, yes, Forever 18. Yeah, I think you have a good point there. Let me just put my computer away, everybody. Hold on one second. I just gotta, for some reason, I can't start the stream without my computer. I think my phone is malfunctioning here. But yeah, so you're exactly right. So here's how I think about Zoom and a lot of those other tech stocks. Well, I think we'll just focus on Zoom. Essentially, if you remember correctly, all throughout 2020, to your point, when COVID was really hitting us hard, quarter over quarter in terms of revenue growth, Zoom was growing at about 300%, so triple-digit revenue growth. Well, now, something on Wall Street a lot of analysts look at is your comps or your comparables. So it's probably going to be increasingly difficult to continuously and sustainably grow your revenue 300% quarter over quarter, because essentially what you had is an entire world or an entire society essentially had to be mandated to get your product and use your services. Now, there's a lot of competitors out there. Like, for example, I use Microsoft Teams, and Teams actually comes free with your Office 365 suite. So Zoom is running up against a lot of competition. It wasn't a bad report. They did post positive EPS that actually beat analyst expectations. They are growing their revenue, but you're just going to have a more sustainable and slow growing revenue as opposed to 100 and 200% revenue growth. So here's the question that begs the question. The stock price is going to trade at a ridiculous valuation because the market is willing to pay for premium earnings growth and sales growth. But now, if you're only growing your company at 12%, well, you're not going to trade at that premium anymore. So I think you're 100% right. I think the entire tech sector as a whole has experienced incredible pull forward. And I've experienced this in my own work, right? During 2020 and 2021, those were exceptional years for me in terms of income as I was selling software and hardware into the tech sector, because a lot of businesses had to expand their remote workforces, so that meant additional spending on SD-WAN, right? Software-defined wide area networks, more mobility. So huge amount of pull forward. But everybody, we are back on the skateboard tonight. We're going to be skating really fast around Central Park, and then we will head to the Moynihan train station, because I do have to wake up fairly early. I actually have to go to Atlantic City, New Jersey. Hey, Arum Z, good to see you, my friend. Hope you're well. Sebastian Ruby Falcone, good to see you. Looks like they're doing some sort of construction here. I don't know why these guys are stopping in the middle of the road. Hey, NG is here. I think I see Vinny Castellano. Good to see you, Vinny. And Cosmo Scary, welcome. Cosmo, it's good to see you, my friend. So another crazy thing I noticed, everybody, after Evan Spiegel, which is the CEO of Snapchat, actually came out and said they are going to revise their guidance down. So he said, and I'm paraphrasing here, obviously, but essentially what he said was, our revenue is going to come in at the lower end of our target, if not lower. So what is this really forecasting? I think it's forecasting that a lot of advertisers are not going to be willing to spend that much money. Snapchat was down 20% after they said that. And the funny thing is, not only was Snapchat down 20%, Twitter was down. Alphabet, Google was down as well. So I think this is really telling that investors are no longer willing to pay premium for stocks that are not profitable. They understand that the economy is contracting. So I think this is the time. Hey, XOXX Bob is here. Welcome, Bob. I see Bagels and Walks. Good to see you, Bagels and Walks. So we're going to do the entire Central Park loop. This is one of my favorite bike paths in the city. And it's not too hot out tonight either. I see Daryl from Chicago, Illinois. Good to see you, Daryl. Welcome. So now this is like Upper East Side. You could actually exit the park over here and be on the Upper East. But I think we're going to stay on Broadway. So we'll exit the park and then skateboard down Broadway all the way back home. I see Cynthia Beal. Welcome, Cynthia. You know, I think I clocked this one time. I think the fastest I got up to was like 20 miles an hour. And on a skateboard, that's pretty fast. Pretty fast. Hey, Tin Man is here. Good to see you, Tin Man. Welcome. Well, everybody, overall, the major indices were higher today. But I think that is going to be short-lived. I really, really do. For a couple of reasons. Hold on, let me see if I could show you guys over here. Unfortunately, maybe too dark. Let's see. Hey, John is here. Good to see you, John. You know, it's too bad that it's really dark over here, because this is my favorite spot in Central Park right here. Yeah, Don Smith says, hey Tom, did you hear about the Goldman Sachs employee who got killed on the subway? Horrible. I almost am in disbelief. So I believe this was on Sunday. There was an equity research associate, I believe, who was taking the train to lunch or to brunch and unfortunately got shot randomly. So horrible, horrible. I couldn't even believe it when I heard the news. Hey, Joe Hernandez is here. Good to see you. Nick Rocks. This is how did Advanced Auto do? Hey, so I wasn't able to join that earnings call because I was sitting in on the Zoom call. So we just briefly talked about the Zoom video call. And they posted a pretty decent quarter, but obviously they're not growing at 300% quarter over quarter anymore. They're growing at 12 in terms of a year over year perspective. So the stocks has gotten crushed, down about 85% since all-time record highs. Now, a lot of people say after this earnings report, it's good to go bottom fishing, right? That is probably not what you should do because there is so much overhead supply in this stock. I believe, and don't quote me on this, but you guys could definitely fact check me in the comments. I believe the all-time high on Zoom, ticker symbol ZM, was about $580. I think we're trading below 90 now. So really, really crazy. So essentially what that creates is something called overhead supply. So when you have a lot of overhead supply, that means you have a lot of people, probably retail investors, maybe some institutions like Cathie Wood, who are holding a lot of these shares of Zoom, and they regret it. So anytime the stock tries to go back up, there's going to be an ample amount of supply coming back onto the market because these people just want to try to break even, right? So be very, very careful about bottom fishing here on Zoom, because it could be many, many years, if ever, that this thing goes back to all-time record highs. It's very possible that Zoom will never go back to all-time record highs again. It's very possible. All right, we're gonna have a good view over here. Hey, Brian is here. So this is the entire skyline of Billionaires Row. Somebody said, Tom, do you think Cathie Wood will be disappearing? Well, I don't think she'll be disappearing. I just think her performance is really, really horrible because I think she violated rule number 1, is to have sound risk management. And I think a lot of times investors can make excuses and say, oh, you know, I don't need risk management because I'm investing on a 5-year or 10-year time frame, which I don't really think that's a good excuse. So you're willing to take about an 80% equity drawdown because you're going to hold the thing for 5 years? I don't know if I agree with that. I don't know if I agree with that. Dan says, hey, Dan is here. What's up, Dan? So she is running an ETF, so she has to keep buying. Yeah, but she doesn't have to keep buying these unprofitable businesses, right? I mean, look at a lot of the companies she's been buying. And I'm not trying to dump on Cathie Wood. But I mean, if you're going to buy, you know, Invitae Pharmaceuticals all the way down, the company's doing nothing in earnings, no revenue. I don't know if that's the best risk management skill there. The thing is, you know, I think the two greatest investors, Paul Tudor Jones and Stanley Druckenmiller, really, really hit the nail on the head when they said it's all about the Fed. Because when interest rates are at 0, it forces people to go into the market and search for yield. And a lot of the times that's in the form of very speculative tech stocks with no earnings. And what happens is, as interest rates go up, a lot of those tech companies where the majority of their earnings are predicated in the future, those earnings are now worth less in today's dollars. So that's why you tend to see value outperform growth as interest rates are rising, because if you think about it, when all of the speculative activity is being taken out of the market, investors want to pay for stocks and companies that are earning money right now, that are distributing funds to shareholders via dividends right now. So those are like the very boring stocks. This dog is beautiful. Those stocks could be anything from like the Coca-Colas. We talked about the Church and Dwights of the world. So the valuation metric of all of these companies has to change on Wall Street. It totally changes the game about how companies are valued. And so Zoom, I was about to say Zoom Info. Zoom, the video communications company, ticker symbol ZM, even though it was a pretty decent quarter, right? I'm not going to say it was a bad quarter, but the stock's down 85% from all-time record highs, because if you look at the past 5 quarters, Zoom has managed to grow their revenue triple-digit revenue growth for the past 5 quarters. Now that's obviously not sustainable. So a lot of those euphoric price action is already in the stock. And now that Zoom is growing at a more slow, sustainable pace, like 12% year over year, the market is not going to assign that much of a ridiculous valuation, especially because interest rates are going up. So here's a little bit of an interesting statistic for everybody. So Zoom grew their year-over-year revenue at 12%, which is pretty solid. So 12% year-over-year revenue growth from this time last year. Now, if we walk that back another year, they were growing at 200%. So talk about crazy deceleration. And I'm so glad that we've been streaming for almost a year now, because we're starting to see a full market cycle take into effect. So everything that we talk about on the streams, this time last year, when we said, Zoom is reported a great quarter, they reported fantastic EPS and revenue growth, but let's talk about the market in terms of a forward-looking mechanism. So the market doesn't care what a particular company or a stock did last quarter. It's forward-looking. So are you going to assign the same premium valuation to a company that is going to have almost a 150% revenue sales deceleration? Probably not. So I think, you're starting to see these things compress a lot, and I'd be very, very scared to buy it here, because look at all that overhead supply. It's an incredible amount. And essentially what overhead supply means is anybody who bought in at $200, $500, once that price gets back to their ultimate purchase price, they're just so thankful that they can get out even. So they tend to dump a lot of the shares. So what happens is you start to have a lot more supply coming onto the market, and it impedes the ability for the stock to go up. And that's why during the 2000 tech wreck, it took almost 14 years for a lot of these stocks to go back to break even, just because there's so much overhead supply. Hey, XOXX Bob, good to see you. Welcome. Well, hopefully everybody had a good Monday. I had a really good Monday. Beautiful day out here in New York. But now we are skateboarding outside the Plaza Hotel and Residences. So for anybody who doesn't know, this is Central Park South. And we'll see who we have in the chat. Hey, Mets fan is here. Good to see you. Lewis is Tom, but it was logic that Zoom had to be great during the lockdown. No being back to the office. Why will they have great revenues? Also valuation. Well, so Zoom is built on a subscription service, so like a SaaS model. So their earnings report is actually showing that they're not having a crazy amount of churn. And I'm really not buying the whole story that everybody is going to go back to the office. We actually just heard from the CEO of Credit Suisse recently, coming in with stark contrast to what Jamie Dimon has been saying, is that all investment bankers need to come back to the office. We've actually been hearing the exact opposite from the CEO of Credit Suisse, saying, look, if we force our people to come back to the office, they're not going to be happy, right? And people work better when they're happy. We're seeing the same thing with Apple, right? Tim Cook just tried to bring in all of their corporate employees back to the office. They threw a fit and they actually protested, and now Apple is walking that back. So I don't think that everybody is just going to come up and cancel their subscriptions of Zoom. But what I do think will happen is that in order for Zoom to continue to grow, they're going to need to do that via acquisition, which means buying other companies, or if they don't do that, they're going to have to invest a crazy amount of money into research and development to come up with new products and services to sell their customers. Hey, Gregory, this is Tom. Georgia Tech is migrating to Zoom now. Previously, we were using Blue Jeans. Ah, interesting. So, Gregory, so please help me understand that. Was Blue Jeans, for some reason I want to say Blue Jeans is a Verizon product, is it? Stephanie Stanley says, hey Tom, we need to be back in the office. You know, I'm not opposed to the office. I actually like going in and talking to coworkers and things like that. But I think it's going to be very hard to get everybody back on board. Anthony Tripp, good to see you. David is here, welcome. Jonathan Richards says, good evening, Tom, good to see you. Mr. Ming, welcome. Vinny Castellano, good to see you. Vinny Castellano is joining us from the one and only Staten Island. It's good to see you, Vinny. Lewis says, Google Meet is free and also Microsoft Teams. Yeah, so I guess we'll continue the conversation like that, because here's one of the biggest, you know, anytime somebody tries to make a bear thesis for Zoom, they say, you know, why would I pay for Zoom if I can just use Microsoft Teams for free? Because everybody really uses Microsoft Office, right? I mean, let me know in the comments what you guys use for your suite. But I use Microsoft Office 365 and I get Teams for free. So why would I pay for Zoom? I mean, yes, Teams can be a little bit buggy at times. I get that. But it gets the job done. I mean, I don't think that Teams, by using Teams, it's impeding upon my sales. I think especially what we're going to see now as the economy starts to roll over, a lot of those nice to haves are going to start getting canned, and the must haves are really going to rise to the forefront, in my view. Yeah, Chris says I use Google Sheets and Docs. Otto says we use Microsoft Teams. So here's the main two that I see being used in my work life. Obviously, number one is probably Teams, but to be honest, everybody, I've been using a lot of Cisco WebEx. Has anybody else been seeing a lot of WebEx calls lately? Well, let me put down the board here. I want to show you guys the Apple Store. So this is the Apple Store right here on 5th Avenue. Beautiful night. Lewis says, Walks on Wall Street, Tom, I love Zoom, but Microsoft gives me Teams for free. Maybe in the foreign markets, we are cutting the subscriptions. That's possibly true. Anthony Tripp says, hey Tom, any input on the Elon Musk saga? Yeah, I mean, I think at this point, in terms of Twitter, are you talking about in terms of buying Twitter? You know, when Elon Musk first announced, on the day that he announced they were buying Twitter, I think somebody in the chat, and we were actually talking about this, actually said that obviously Elon Musk is overpaying, and now that the stock market is rolling over, he's probably going to come up with some excuse to try to renegotiate that deal. And I think the excuse is actually pretty good. It's actually pretty clever. So essentially, maybe I shouldn't call it an excuse, but essentially what Elon Musk and his team is arguing is that there's some data that has come to the surface that about 5%, and 5% is significant, so about 5% of all activity or users on Twitter are bots. So if that's the case, Elon Musk says if that's the case, if all of the If 5% of the users on Twitter are bots, that changes the valuation metrics because he doesn't want to pay a premium for spam accounts, which I get. But I think the timing is just too beautiful. So they're probably going to renegotiate the deal. There's probably going to be a lot of litigation. But Twitter was actually down off the back of the Snapchat news today. So I'm not sure if you guys saw that. So at the JP Morgan Chase conference, Evan Spiegel, which is the CEO of Snapchat, actually came out and said they are now revising their forward guidance down. So they said they are probably going to come in very, very low on their EBITDA projections as well as their revenue projections. And on the back of that news, we had Twitter declining, we had Alphabet declining, and I believe the Trade Desk also declined as well, which is big in advertising. But everybody, these little pods here, you can actually see well into the Apple Store. Very unique. Anthony says Twitter may be committing fraud. I mean, look, I'm not going to rule anything out, but Snarky says, I've been stuck in COVID jail 7 days now because the person I live with attended a pointless team lunch at the office. Ooh, yikes. Well, please get better soon, my friend. Mark Davis, good to see you, my friend. Mark Davis is from Toronto, Canada. Always a pleasure to have you joining. Ed says Elon didn't do his due diligence. Yeah, I mean, they definitely made the offer rather quickly, didn't they? Wayne says Twitter, not 5%, at least 20% bots is the information that has surfaced. 5% is the official filings. You were right. So you are right. So here's Wayne McKay. This is what I think about that. There's no way that 20% are bots. I think that's ridiculous. And I'm a huge fan of Twitter. Twitter is my favorite social media platform. If you want to follow me on Twitter, at Walks Wall Street, I post a lot of my equity research and things like that on there. But I mean, 20%, that's ridiculous number. I could believe 5, but 20, I don't think so. Like, just think about that for a second. 20% of the user base on Twitter you think is all bots? I'm not buying that. But then again, I mean, who knows? So everybody, we are looking up at 432 Park Avenue here. Beautiful building. 3T3 is my company, just reversed non-essential employees to coming back to our campus again. Wow. It seems like a lot of companies are trying to bring their employees back to the office, and then one of two things happen. Number one, the employees get so upset that they will just, the labor market is so hot right now. If you're a very talented equity research analyst or an investment banker, or even if you're, a software engineer, or really anything, guys. I mean, you could insert whatever you want into that statement. You can probably go out and find another job relatively quickly. So whichever companies that are really, really forcing their employees to return to the office, they're probably going to be met with some sort of resistance. I think the only company that has successfully returned all of their employees to the offices is Citadel Securities. So Citadel is obviously one of the biggest market makers on Wall Street, the CEO being Ken Griffin. But then again, I mean, if you work at Citadel, you probably really, really enjoy the job. You're making a very, very good living. And there has been studies shown that productivity does go up when you have a collaborative environment in person. But I don't want to put words in other people's mouths. I like the remote work. I think if you can be just as productive working remote, I think you should have that right to do that. But we'll see. Ken Glass is here. Welcome, Ken. Good to see you as always. Mets fan says, look out for Watson from IBM. So I think IBM just sold their Watson healthcare unit to PwC. Red Baron says, what is a good annual return on investments? Well, hopefully it's in the positives. Well, I think that's a very subjective question, but The S&P 500 usually returns about 8 to 10% a year. So I'd say anywhere from 6 to 10% is great. If you can sustain that, I think that's fantastic. JJ says, I can believe it's closer to 10 to 20% bots. You'd be surprised at the amount of fake accounts made to boost posts, products, and followers, etc., says JJ. You know, that's a good point. Like people paying for quote unquote like followers and things like that, perhaps. Look, I mean, we're definitely going to see what happens. It's going to be interesting nonetheless. So this is Madison Avenue now, everybody. Wow, check this out. So right here from 57th Street, this is technically Billionaires Row right here. If you look directly in front of you, you can see the very top of the One Vanderbilt building, which is phenomenal. But here's something, I want to read everybody a little bit of an excerpt of what Evan Spiegel said today at the JP Morgan Chase conference. Because I think it's very important to pay attention to this, because has anybody ever heard of the cockroach theory? Anybody in the chat? Hey, 61, I see you in the chat. Good to see you. Bernard Friedman, welcome. Bernard, it's always a pleasure. So the cockroach theory essentially states that if you see one cockroach, there's probably more behind the kitchen counter. So check this out, everybody. This is what, speaking of IBM, interesting, we were just talking about that. So this is what Evan Spiegel said. The CEO of Snapchat warns that they will miss revenue and EBITDA projections as well as slow hiring. They planned on hiring about 1,000 people. They're going to cut that to 500. And he says, and I quote, "We believe it is now likely that we will report revenue and adjusted EBITDA below the low end of our guidance." So not just missing guidance. And again, this isn't Wall Street's projections. This is actually their own guidance that they gave last earnings report. And I think Snapchat reported earnings about a month ago, didn't they? I think they reported earnings about exactly a month ago. So they're saying that revenue is going to come in below the low end of the guidance, and they're going to miss on earnings or EBITDA, adjusted EBITDA. So if Snapchat is experiencing this problem, don't you think that other companies are experiencing it as well? And I think that's exactly why we saw Twitter sell off after the bell. I think that's why we saw Alphabet also sell off. So I don't think this is just going to impact just Snapchat in and of itself. I think we're going to see this affect many, many other businesses on Wall Street. And so here's the interesting thing. If Snapchat is projecting that they are going to have revenue decelerate even more, then you probably can conclusively say that a lot of different brands, so for example, we're just skateboarding past the Gucci store here, all of these other brands are probably saying, you know what, instead of spending $100 million a year on advertising, that's just an arbitrary number, by the way, maybe we'll spend about 50% of that number on advertising. So that can really, really hurt a lot of comps, especially at those very large tech companies such as Alphabet or Google, because, you know, look at Google's search. Maybe people don't spend as much money to run Facebook ads, things like that. So this could be the start of a cockroach theory type scenario, where once one publicly traded company starts to renege and sort of walk back their guidance, I think you're going to start seeing a lot more companies start to walk back their guidance as well. But what do you guys think? Let me know what you guys think in the comments. But first, I want to show you the St. Regis Hotel. Beautiful hotel, by the way. Very famous to New York City. Hey, I see Gunmo Ed. Good afternoon, Gunmo Ed. This is nice to see you, Tom. It's been a while. Last time the market was up 30%. Might have to sell my place at Stairway to Heaven building. Percentage of bots in the chat. Just wondering. Good to see you, Gunmo Ed. Gunman or Dutchman is here. Welcome, Dutchman. Exploring Japan says New York. Yes, we are in New York City, right next to the St. Regis Hotel and the Peninsula Hotel. Yeah, Dutchman is beautiful inside as well. We're going to skateboard over to St. Thomas Church. Wow, I have to turn around and show you guys that. It looks like they're building a brand new art gallery here, everybody. Check this out. Talk about beautiful. Carlton Fine Arts. So this little building has been abandoned for quite some time. So it's definitely refreshing that an art gallery, it's probably going to be like a pop-up shop. Hey, Marty Lewis is here. What's up? Says, hey, Tom, I'm excited to see you back on the board. Thank you so much, Marty Lewis. I appreciate you very much. Gunmo Ed is 11 West 57th Street. Tom, cheers. So Gunmo Ed, I've been working out of the WeWork building right across the street from there. Life, Liberty, and Guns, good to see you. Welcome. Rob DeCaro, congratulations on your success. And to much, much more, Rob. Red Baron says, do you think the market will fall into correction territory / bear market? Well, the NASDAQ is already in a bear market, and on Friday, the S&P 500 fell into a bear market for all of 10 minutes and then rallied. I think this market is going to roll over again. Here's the reason why I say that. And I'm going to bring up my two best friends, and I've been hammering these guys' names ad nauseum here. Gunmo Ed says, Tom, are you still in Brickell? No, we are in New York City, but I will be back in Brickell very soon. We'll be back in Brickell very soon. So Stanley Druckenmiller, Paul Tudor Jones, the number one thing that they say is, what is the Fed doing? What is the Fed doing? And I know I talk about this every night, but it's so important because ever since 2008, really, the Fed has driven this market. Because the amount of euphoria and the amount of exuberance and the amount of capital deployed to money-losing companies, or as I like to call them, zombie companies. And if you guys remember, probably about 4 months ago, I actually wrote a piece about zombie companies within the Russell 2000 and how that many of those companies are only able to be around because of artificially low interest rates. So when money is cheap, or money is essentially free, businesses can afford to take on more debt to help fund the business grow, to hire people, to pay salaries and things like that. But when interest rates go up, that spigot, think about like turning off your faucet. When you turn off your faucet, the water slowly starts to shut off. And I think that's what the Federal Reserve is doing right now. So if you guys type !news, NEWS in the chat, it's going to drop the link to the Behind the Street newsletter, and you could actually read the piece where I actually wrote about zombie companies, the Russell 2000, and the relationship between valuation metrics on Wall Street and interest rates. So please, please, please check that out. Because a lot of people are bottom fishing here, and the Federal Reserve has not even yet started to unwind their behemoth balance sheet of nearly $9 trillion. Think about that. Yes, they're raising interest rates. We had 2 50 basis point back-to-back rate hikes in a row. Very uncharacteristic. Usually we get rate hikes in the form of 25 basis points. So this is really a telltale sign of the market that Jerome Powell and the Federal Reserve are really, really getting tight and strong on inflation. So assuming that continues, which I think it will, I think a lot of that's going to be predicated on the jobs number that we get, the employment number that we get on Friday. But assuming that continues, the higher interest rates go, the further in the red the profitability curve starts to go for a lot of those tech companies. Because again, I'll explain it one more time, a lot of tech companies, or high growth Russell 2000 type NASDAQ stocks as well, the vast majority of those earnings are forecasted not right now, but in the future. So when interest rates are at zero or near zero, sometimes in real terms negative, those future earnings are worth more today. But as interest rates go up, the higher they go up, the less valuable those earnings are in present times. So that's why you'll see a rotation out of growth and into value stocks. Why do we think we've been seeing, a lot of oil and gas stocks doing really well? Because they're turning a profit. Look at, a company like Church and Dwight or something like that. So I would really look to the Fed once they start to take their foot off the gas here and maybe stop raising rates. That's when I think it's safe to slowly deploy capital into this market. But what I will say is if you're just actively contributing to a retirement account, I would not stop doing that because that is very important. Yeah, Gunmo Ed says NP&G, Procter & Gamble. Yeah, Lewis says NPV, net present value. Hey, Miker says, but why does high interest rates help with inflation? Do they burn the money? Well, essentially when interest rates are higher, right? Let's say if I want to buy a house or something like that. It's actually a pretty good example now because interest rates for the first time on a 30-year fixed, for the first time since 2011, are actually above 5%. So when the cost of money goes up, people are not going to be able to afford to borrow a lot of money. So asset prices has to come down. So usually when interest rates go up, the prices of homes tend to go down a little bit. Hey, Kevin Sunderland, what's up? Kevin says, hey, Tom, I had a great weekend in New York City, missing it already. Yeah, Kevin, I saw that. That's awesome, man. So Kevin Sunderland, everybody in the chat, has been a long time viewer, and he actually just concluded his trip to New York City. And I think he was able to see some Broadway shows, which is phenomenal. So I hope you had a fantastic time with you and your family. And please come back soon, man. Next time, let me know when you're in town. Maybe we'll grab a cup of coffee or something. But everybody, we are right outside the St. Patrick's Cathedral. But just to touch on the interest rate point a little bit, think about if you are planning to buy a house and you say, okay, my budget is about an $1,800 a month mortgage or whatever it is. And I actually think that's probably the wrong way to look at it, but that's the way the vast majority of people look at things. As interest rates go up, your $1,800 mortgage payment is going to go up and up and up. So the metrics change on what you can afford. So on a 3% interest rate, maybe you're targeting you could afford a $450,000 house. But as interest rates are 5%, 6%, well, maybe you can no longer afford a $450,000 house. Maybe you can only afford a $300,000 or a $275,000 house. So essentially, when interest rates are high, there's not a frenzy to borrow money. But if money is cheap and money is free, yeah, sure, I'll take out the loan, because if inflation is running at, let's say, 8.5%, I think the last CPI number we got was about 8.5, I think, and I borrow money at 3%, well, the money's free, right? So perfect example is the investment property I bought. I got about a 3% interest rate, but inflation is running at almost 9%. In addition, if we calculate this way the CPI was calculated back in the 1980s, that probably goes to 12%. So essentially it just cools things off. It slows things down. And that's why I would still be very, very cautious about buying beaten down tech stocks here. And just do the math. Like, think about the stocks. Like, take a step back and say, okay, what are the stocks that are really getting freaking hammered here? It's the stocks with no earnings. Look at Snapchat, reported negative EPS last quarter. So even though they're guiding even lower on revenue, I mean, they don't earn any money anyway. So who's going to want to buy Snapchat right now when I could buy a company who's earning money right now? Hey, Roy is here. What's up, Roy? Good to see you, my friend. Bitzita Lopez is here. Says, hey, Tom, it's good to see you skateboarding again. Yeah, it's good to be back on the board, too. I mean, one of the reasons why I'm back on the board is because the weather's nice again. If you guys remember last week, we were in New York. On Mother's Day, it was like snow flurries, which was kind of crazy, but I want to cross the street because I want to show everybody one of my favorite art galleries. Now, if you remember correctly, this Eden Fine Art, we've actually been to 3 different locations. Number 1, obviously right here, 50th Street. Number 2, in South Beach, Miami. And number 3, there's one in Soho. This is probably one of my favorite art galleries in the city. So we're about to see some very unique work here. Hey, late night with 777. Good to see you, my friend. Hey, Jamie Dixon says, hey, Tom, good to see you, Jamie. Lewis says, hey, I just got on. How was your day? My day was really good. It was a busy day. I think tomorrow's going to be even busier. So I may leave for Atlantic City, New Jersey sometime tomorrow, or maybe on the 25th early in the morning. That is still to be determined. Amir Cohen is here. Hey, Amir. Good to see you. We're checking out the Eden Fine Art Gallery, and we are talking about Zoom's earnings. So Zoom actually reported a pretty good quarter, and Snapchat, even though they didn't report earnings, we heard from the CEO, Evan Spiegel. He was talking at the JP Morgan Chase conference, and he actually lowered forward guidance again. So this is my favorite piece here. What do you guys think about this piece, The Mighty Bull? You know, one of my really good friends, I won't say his name, but I think he's probably watching, really likes this piece. I think it's a beautiful piece of art. Hey, MBA Elias is here. Says, hello, Tom. I hope you had a good day. I did have a very good day, MBA Elias. Very good. I was back in the office today, by the way. Maya says, Tom, I love the Buddhas. I do too. Christian Wilson says, Scrooge McDuck. Hey, Sina NSN. Good to see you, Sina. Melee says, good evening from Scranton, Pennsylvania. Good to see you, Melee, and good evening. Hey, Ken Griffin says, Roy, what are your thoughts on the cause of high gas prices? I'll let Roy answer that. Quinn FTBL says, love the sound of the skateboard. I love it too. Ruby Falcone, hope you're doing well. I think this piece of art is very fitting for the times, wouldn't you say? Hey, UPS One says, Tom, I have a problem with the CEO of Snapchat. What is your problem with the CEO of Snapchat? We'd love to hear it. So the reason why I like this piece of art, everybody, is because if you look really closely, it has old stock certificates on it. Hey, Danny Boy, thank you so much for the $10 donation. You are way too kind. I appreciate you very much. This is for the board, thanks. Appreciate that, Danny. Check this Commonwealth Oil Refinery Company. These are the very old original stock certificates. I love these. The detail on this piece is fantastic. Keith, so I think that the price of oil is really high because of, and I don't really want to make this too political, because when it gets political, the chat tends to breathe fire on me, and I'm not looking to do that tonight. But I think there's a big policy blunder in relation to a lot of this environmental green stuff. I am a huge proponent of green energy, but here's what I am not a fan of. I am not a proponent of turning down our natural gas power plants, our nuclear power plants, before we have, and nuclear power, by the way, is the cleanest form of energy on the planet. But essentially, you cannot turn down our non-renewable power infrastructure before we have a conclusive infrastructure in place to support the amount of energy that American people use on a day-to-day basis. It's not going to come from wind, it's not going to come from solar, at least not yet, right? At least not yet. So the biggest problem that I see is the over-regulation of the power industry. I guess we'll walk the board across here because I want to show you guys this other art piece. The over-regulation of power plants. I tend to know some people very close to my family who work in power plants, and it's almost like they can't even operate. It's like they're demonized. So here's what I am in favor for. I think everybody agrees that we want a greener and brighter and better future. I think everybody is in agreement on that, but what we need to do is not say, oh, we are going to demonize the fossil fuel industry and start pointing fingers for political points. And I think that's what's happening. It is a political game saying, oh, if you want to increase production at a particular power plant, if you want to burn natural gas, oh, you're a big bad guy and you're a Republican and you shouldn't vote for him. That's not what we should be doing. What we should be doing is simultaneously producing the energy we need, while at the same time running in tandem projects to build out a sustainable infrastructure for renewables so that we can conclusively say, hey, this new renewable energy infrastructure, whatever that looks like, will be able to provide us with the appropriate amount of power that we consume on a daily basis. Right now, we cannot get that from solar, we cannot get that from wind, and we are actually having major power companies in the United States calling for the potential of rolling blackouts this summer because of this problem. But that is my 2 cents. And here's another really bad thing, and this is why it's not good. Because essentially right now, especially with Germany, they put themselves in a situation where they essentially are reliant on Russia to power their country, and they have no choice because this war is egregious, what is going on in the Ukraine. So at the same time, we are imposing sanctions here on Russia. So talk about how crazy this is. We are imposing sanctions, right, on Russia, which I agree with, actually. I think everybody agrees with it, right? But at the same time, we're buying their energy because we don't have enough when we could self-sustain. Germany obviously has to, because we won't really go down that political rabbit hole. But that's just what's so ridiculous. And in order to have a very sustainable, clean global environment, it can't just be the United States doing it. Okay, it can't just be the United States. Because China right now, they are building more coal power plants. They're actually building more coal burning plants than ever before. So it can't just be us, it needs to be a global effort. And I think that the United States should lead from the front. I think we are leading from the front, but at times that can put us in a very bad situation, which I think it is putting us in right now. I'll read the chats in 1 minute. I just want to skateboard over to this side because the concrete tends to be a little bit more smooth over here. All right, speaking of Jamie Dimon, this is going to be his brand new building here. All right, let me pull off to the side, my friends, and I will read some of the chats. (47th Street). Hey, Noodles, is Tom. Did you grow up skating on Long Island? I skated quite a bit on Long Island. No cucks allowed says, I'm glad we are sending $40 billion to Ukraine than here at home. Yeah, it's definitely a crazy situation. Hey, Sierra C says, hey, Tom, I'm just tuning in. Love the return of the skateboard. Thank you so much. Sierra C, much appreciated. Be blessed as you give us the skateboard show tonight. We do. So if you guys are enjoying the stream so far tonight, if you're enjoying the conversation about not only what Snapchat said today, but Zoom's earnings, leave a like on the video if you want. Subscribe to the channel if you are new. We go live about 5 days a week. But I think we'll go to Rockefeller Center, might as well. Alrighty. Hey, E. Monica says, hey, Tom, go get some New York pizza. Maybe I'll do that tomorrow for lunch. JSB says, US is looking for conflicts again. Financial bubble is repeating, says JBS, or JSB. Hey, James says, I could definitely go for a slice right now. Now nearest Ray's. You know, Ray's is decent. I'm not going to say Ray's is the best because it's not, but it's definitely a decent slice. It's a solid like 7.3. 7.3. Ray's. Hey, Alan Wilson, what's up? He says, hey, Tom, it seems like just like old times. I know. You know, it's really good to be back on the board, and I mean that. It gives me more energy for sure. I just didn't really want to skateboard during the winter because it's so brutal. I think for anybody who skateboards sort of knows what I'm talking about for sure. But everybody, this is East 49th Street overlooking Saks Fifth Avenue. But we are going to check out Radio City and Rockefeller Center. Christian Wilson says, Ray's is the best when I was broke. Interesting. You mean it tasted better when you were broke or something? Ray's is decent. Ray's is actually it's decent, but I don't think the line doesn't justify. There's always a big line outside of Ray's. I don't think that line is quite justified. But everybody, we are going to do a quick lap around the one and only Rockefeller Center. Beautiful tonight. Hey, City Show is here. Jonathan France, welcome. Strider 1239 says, Tom, did you see the article on Tether? It reads that $10 billion of redemptions have occurred since the Luna Terra crash. Thoughts? Yeah, so I mean, this is exactly what I've been talking about for a long time. I think the vast majority of the alternative coins, or the altcoins, I think are either one of two things. Number one, they're either outright scams, or number two, they're just securities. That's why I don't buy these things. and especially now that Terra Luna collapsed, you are going to see the SEC come out here breathing fire, and there's going to be, blank to pay. I don't want to swear on the stream, but there's going to be, blank to pay for this. And the SEC is going to do one of two things. They're going to say, look, all of these altcoins are securities, because from the very limited knowledge of securities law that I know, if you create something out of thin air and the founders hold a specific stake in these tokens and then are soliciting them to investors, that's a security. And when you get mixed up with securities law and you're soliciting unregistered or unlicensed securities, that's a big issue. You're talking about big issue there. Now look, that's going to give me a lot of heat in the chat and in the comments and in my email, and I understand that. Maybe I'm wrong. Maybe I'm wrong about that. But from the research I've done, all of these altcoins are securities. The number two I'll say is a lot of the stable coins, I think a lot of the stable coins are good if they are regulated. And I think this gives the SEC an amazing opportunity here to step in and regulate this environment and say, hey, we want stable coins in order to trade in and out of either Bitcoin or Ethereum, or just to manage your liquidity, but you need to prove that it's backed up by something. Just like how an ETF, they have to disclose their holdings ever so often, I think that these stable coins should be required to disclose what is, I guess, quote unquote, backing them up. So here, that's the good news. And I think once we see that regulation come through, you are going to see an explosion of institutional access to this space. Because right now, and if you guys want to read the piece I actually wrote about this exact thing, if you type !news, N-E-W-S, in the chat, click the link to the Behind the Street newsletter, punch in your email, sign up for free. I wrote on this exact subject about 3 weeks ago. Once you have clear and conclusive regulation from the SEC, institutional investors will feel comfortable with an allocation to Bitcoin. But since there is no clear regulatory guidelines in relation to stablecoins and other cryptocurrencies, you are not going to see large institutional adoption. And here's what I mean by institutional adoption. I have some friends that run pretty decent sized, mid-sized hedge funds, run 150 million bucks. Yes, they own Bitcoin and they trade Bitcoin. That's not what I'm talking about when I'm talking about institutional money. What I'm talking about when I say institutional money is sovereign wealth funds. You're not going to have sovereign wealth come in here without any type of regulatory clarity. You're just not going to happen. I think once that happens, you're not talking about hundreds of millions of dollars. Now you're talking trillions, literally. So just imagine if Bitcoin can capture 1 or 2% of that money out there. You just do the math. Hey, City Show, thank you so much for the $5 super chat. Appreciate it. So hopefully that answered your question. I would really, really be cautious with putting your money in these stable coins because we don't know what it's backed up by. That we don't. And it only takes for the SEC to say one thing, to say, yep, these are securities, and the vast majority of these altcoins are going to go to zero rather fast. Hey, sunshine after rain, good to see you. Good evening, hope you had a great day today. We're taking a walk around Rockefeller Center. Hey, Daniel G is here from Buenos Aires, Argentina. Welcome, Daniel G. Good to see you, Daniel. I see Sally is here, welcome. Strider 1239 says agreed and thank you for your input. And I'll clarify one more thing about the cryptocurrency environment. A lot of the times when I talk about it, it can seem that I'm very bearish. It's actually quite the contrary. I am an extreme raging bull on Bitcoin. Now, that doesn't mean that the price is going to take off and go to the moon tomorrow. I still think that we need to touch the 200-day moving average and shake out a lot of these speculators here. And you know, as of right now, Bitcoin has almost a 1-to-1 correlation with the NASDAQ. So it's a risk-on asset, at least for now. Hey, Ivan is here. Says, hey guys, my name is Ivan N. from the Philippines. Good morning. Hey, Ivan, good to see you, my friend. Love the Philippines. Hopefully I'll be able to go there someday. Elle is here. Says, Luna was always going to crash. I made bank off of that fall. Luna was just like the Fed and I waited for it. Wow, well, congratulations on your gains, my friend. Kurt says, I'm fairly ignorant about it, but isn't every investor a speculator? Yeah, that's true. So Kurt, that's actually a good point, and I'm glad you brought that up. So during times like this, I think everybody should go back and revisit the greatest value investing books of all time. Because if you guys have been following the streams as we skateboard around and hang out around New York City, Miami, I tend to be a very disciplined growth stock investor, and growth stocks are not in favor right now. They're just not. So that tends to, you know, if anybody's ever read the book Reminiscences of a Stock Operator by Jesse Livermore, he says there's times to go fishing, and this is one of those times to go fishing, or I guess if we use a more modern terminology, time to go play golf maybe, or skateboard around and do live streams. Because when the market is not in gear, it's not in gear. And I think a lot of people try to bottom fish and it doesn't work out too well for them. So I think in times like this, when interest rates are on the rise, I think it's important to revisit those value investing books. My personal favorite is Margin of Safety by Seth Klarman. So Seth Klarman has a totally different outlook on the stock market and on investments than somebody like a William J. O'Neill. Well, maybe I really shouldn't say that, but Seth Klarman essentially is one of the greatest value investors of all time. And he wrote a book called The Margin of Safety, which is all about deep fundamental securities analysis, trying to buy companies at steep valuations, so looking for mispricings in markets. And as of right now that interest rates are going up, investors are favoring stocks who have earnings right now. They don't care about the tech companies that are probably going to earn money maybe in 2023 to 2025. Investors want earnings right now, here and now. So I think that's a great classic to read as a quick refresher, especially during these times when value is now in favor. So I would check out Seth Klarman's Margin of Safety. If you could read the PDF, there's always a bunch of free PDFs online of Margin of Safety, so I would check that out for sure. But going back to Kurt's point, Seth Klarman will tell you that not all investing is speculating if you are value investing. And we won't go into an entire lesson on value investing on tonight's stream. Maybe I'll prepare a lesson plan and go into Seth Klarman's Margin of Safety chapter by chapter on another day. But to his point, if you ask somebody like Warren Buffett, Seth Klarman, they would tell you that no, not all investing is speculating. So I think it's interesting. Where are we going now, guys? You know, I think I may turn around and go back up. I really don't want to skateboard through Times Square tonight. But this is 7th Avenue. Let's see who we have in the chat. So Top Gun is coming out May 27th. Hey, Miguel Gonzalez, good to see you. Isaac, welcome. Kaiser says Seth Klarman's racehorse just won the... Really? Did he really? I didn't even know Seth Klarman owned a racehorse. That's so funny. Hey, Dutchman says, Tom, have you had dinner yet? I did have dinner. Hey, Sunshine After Rain says, wow, Tom, your wounded knee is back tonight. Yeah, so we do have the wounded knee board. We are out of hibernation. I think it's been about, 6 months? The board is back out of hibernation now. Chris has just got back from the Philippines. You sure need to go, Tom. Chris, I definitely want to go to the Philippines, 100%. Cynthia Beals says, Tom, a chapter by chapter review would be good, or synopsis. So here's what I'm thinking about doing. And I know I've said this probably for the past 3 months here. I want to start to do a behind the desk stream once a week. Maybe like on Friday, it'll be sort of like a Zoom call. We could all hang out at the office. So maybe we'll do that. I'm so surprised I was able to jump that curb. I haven't skateboarded in so long. I was like, yeah, I'll try to jump the curb on the stream, might as well. Right. So speaking of dinner, I actually went here today to Adele's Famous Halal. Hey, John Hale says, hey Tom, it's amazing how you're doing this. Thank you for being here, John. I appreciate it. Yeah, Gregory says, Tom, long line for halal. So this line sometimes can stretch all the way down to 49th Street. It's crazy. But this is probably some of the best halal food in New York City. Hey, Coffee with Thomas, welcome. 57 in Albany, New York. Coffee with Thomas, love the username. Yeah, out and about is like, please don't do it now, you'll throw out your hip. Yeah, maybe we'll save the tricks for a different stream. So no more midstream ollies until at least August. Beautiful flowers here. Wow. So if you look to your right, everybody, this is Del Frisco's. Del Frisco's is one of the best steakhouses in Manhattan. You know, before the pandemic, I used to take a lot of clients here. Very good spot. So if you're ever on business in New York City and you want to take a client out to a really nice place for a nice dinner, or even if you're just visiting, come here, Del Frisco's. Very good. Hey, Photos from Around New York is here. Good to see you. Happy Monday, Photos from Around New York. Hopefully you're having a good day. Mona is here, says, hey Tom, it is 50 in northern upstate New York. You know, 50 is actually not too bad. Just as long as it's not raining or windy, 50 degrees is actually quite nice. Coffee with Thomas is walks in Wall Street. Hello also as a warm under the blanket. Oh, as I am warm under the blanket. Very nice. Hey, Stephen James is here from Arizona. What's up, Stephen James? I wonder what the weather is like over there in Arizona. I just am coming from Miami, Florida, so pretty hot and humid. So for those of you who are just joining, everybody, today's Zoom reported earnings, ticker symbol ZM, actually reported a pretty decent quarter. They beat on both the top and the bottom line. If we want to talk about EPS or earnings per share, Zoom beat analysts' expectations by reporting $1.03 of EPS. Many analysts on Wall Street were expecting 87 cents worth of EPS. There was a slight beat on revenue or the top line, but I really just want to call it in line with analysts' expectations. We'll just call it even at $1.07 billion. the company seems to be able to be reducing a lot of their costs right now as earnings and sales are decelerating. You know, during the first half of this video, we pretty much went over why Zoom's valuation is being killed. Because essentially Wall Street is a forward-looking mechanism. The market is a forward-looking mechanism. And over the last 5 quarters, Zoom has reported back to back to back to back to back revenue acceleration quarters with at least 300% revenue acceleration. Now, 12% revenue acceleration. So extremely, extremely decelerated earnings. That doesn't mean the company's not growing. It just means it's not growing as fast as it used to be, and valuations will reflect that accordingly. You know, should Zoom is continuously still able to put up those 300 to 500% numbers, yeah, sure, it could still trade at that ridiculous multiple to sales or multiple to earnings. But, you know, just to give you an idea, if we compare year over year revenue growth to the same quarter last year, the same quarter last year was 200% revenue growth. They just reported 12% revenue growth, which is not bad, right? But crazy deceleration. And I think that's why we've been seeing the stock crater about 85% from all-time record high. But it's something interesting, and I really want to make sure I drive this point across to the viewers. We're just starting to see that deceleration show up in earnings, and the market has been pricing this in for 2 years now, almost 2 years. I'd say about a year and a couple months. So it doesn't really matter if a company reports really, really good earnings. What's even more important is the forward guidance that the management teams give. Because if a management team says, yeah, we posted 100% earnings growth and 100% EPS growth, but looking forward, we're actually going to have severe churn in our business, and we're actually probably going to experience severe deceleration. Well, that stock is going to sell off because nobody wants to pay for earnings that already happened. Wall Street wants to pay for earnings that are expected in the future. And with Zoom, those earnings that are expected in the future are not as robust as they once were. Still a great company, just not going to demand a premium valuation. Red Baron. Oh, Red Baron is in the pizza company. Very cool. Red Baron says, yes, Tom, but Zoom has been falling. Yes, it has. And I would not buy it here either, because the stock now has so much overhead supply, an incredible amount of overhead supply. Hey, Oscar says, Tom, I just lost your comment. Oh, Puerto Rico, 80 degrees in Puerto Rico. Very nice. Photos from around New York. Says, Tom, futures are down. Yeah, I think there's probably a very good possibility we give up all the gains we had for today. All right, so once we cross 49th Street, we're actually going to come up on the News Corporation building. And News Corp actually just acquired Investors Business Daily for, I think, about $200 million. Cindy Foley is here. This is cool on the skateboard. Good to see you, Cindy. Welcome. James says, hey Tom, if the market is weak, that means the housing market will turn weak as well. I mean, it's definitely very possible. I think the only thing that has been acting as the saving grace for the housing market right now is the shortage of inventory, right? Because interest rates are going up. We now have, I think the average 30-year fixed rate mortgage is about 5.25%, over 5% for the first time since 2011. Home sales are down, that is true. Existing home sales are down, but why? Well, I think it's for a couple reasons. I think interest rates are putting pressure on the market, yes, but I think there's still not a lot of supply. There's still not a lot of supply on the market. We actually heard from the home builders, and one of the interesting things not the home builders, I apologize, Home Depot. So last week we did an entire stream covering Home Depot's earnings. And one of the interesting things that the CEO of Home Depot said is that sales have actually increased in the department where they sell a lot of the materials for home renovations. And this is what he said. He's like, from the data that they see, more people that have essentially from the year 2000, let's just call it even, 2010, give or take. The people who bought a house 2010 onward probably have sub 5% interest rates for sure. So why would they sell their house right now to go back into the competitive market to not only pay more for a house, but have a higher interest rate? So what the CEO of Home Depot said is he said he's seeing more people not choose to move, but to spend their excess cash not on buying another property, but remodeling and redoing their existing home that they have very low interest rates on, their mortgage. And I guess that makes sense because in the data, that's exactly what it shows us. The data shows us that the inventory of homes is at all-time lows. So people are not willing to list their house in the market. They're like, okay, we don't really want to move because we're seeing all this craziness go on. And even if we do move, we're probably going to be paying a little bit more for the same square footage. So why don't we just spend the money on making our home look a little bit nicer? And Home Depot was one of those only retailers that blew out their earnings. Walmart, ticker symbol WMT, really got rocked. Target, ticker symbol TGT, hammered after earnings because they've been having a really hard time passing those price increases on to consumers. So I think if Walmart and Target want to be able to sustain and if not grow their earnings, they're going to have to raise their prices. But we'll see if consumers balk at that. Hey, City Show is here. Good to see you. Melissa White says, hey, just tuning in. Good to see you, Melissa. Always a pleasure. So we're just walking past my old office here, Marsh McLennan building. And in a couple, I'd say about 2 blocks, you guys are gonna be able to see a beautiful, beautiful view of the Empire State Building. So really excited to show you guys that. It said it was supposed to rain at about 9 o'clock. I'm not so sure that's true. At least that's not what it appears right now. Palmetto says, Tom, Home Depot is expensive. Yeah, Palmetto's Target doesn't sell themselves at all. Pixelogic says, hey Tom, before I realized you were on the skateboard, I thought I accidentally hit my fast forward button. Well, yeah, well Pixelogic, good to see you. Yeah, somebody says even the Dollar Tree is getting hammered. I think that, and so Emmanuel, here's another really good point you make. I know I've been saying that a lot tonight, but You know, a lot of my friends have been calling me saying, hey, this stock's down, should I hedge? A lot of my friends in the hedge fund business or whatever. And sometimes there doesn't really need to be a reason for a stock to sell off, right? If interest rates are going up and investors are taking more of a cautious approach, they're just going to market sell everything. They're just going to raise cash. You know, it's a flight to safety. And I think that's what we've been seeing, because the Dixie approaching record highs that it was at since 2011. I think the Dixie is now just breaking out over its swing high, either in 2011 or 2016. So it's funny that a lot of people now are being forced to sell out equities and actually buying back the dollar at multi-year highs. So it's quite interesting how that's playing out. Definitely not good for emerging markets either. Old Scary World says, hello all, good to see you. So here's what I like about this corner, 43rd Street. You can see a beautiful view of the Empire State Building, and you can see a great view of One Vanderbilt, which is also very fantastic if you guys actually want to go up into One Vanderbilt. But yeah, very crazy times we have in the market. You know, the CEO of Citadel, Ken Griffin, just did a phenomenal interview with Bloomberg. I wish I had enough time to link it in the chat. But if you guys Google Ken Griffin Bloomberg interview, I think he does a really, really good job at explaining just what's going on right now. Photos from around New York, yes. So I haven't seen the Swan in such a long time. I hope he's doing well. Our moderator, the Swan from Ireland. Hey, Old Scary World says, hey Tom, I love watching your night walks. Thank you for doing the stream. Well, thank you for being here. I appreciate it. And I'm so pleased that you are enjoying as we are walking outside of the Bank of America Tower, overlooking the Empire State Building. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe if you are new. If you want to see more live streams, we usually go live about 5 days a week at 8:30 Eastern Standard Time. So feel free to join us for that. City shows like, Tom, it's so hard to drink coffee on this skateboard tonight. You know, well, I think since the stream has grown, you know, there's so many more, for everybody who's watching the stream right now, we used to do these skateboarding live streams all the time. But now that the chat has grown so big, it's hard for me to read the comments. So I think we're gonna start to go to a hybrid stream environment. I feel like I'm talking like a CEO explaining a hybrid work environment. I think it's more appropriate for our company, Walks on Wall Street, to adopt a hybrid stream environment. So we'll skateboard for 10 minutes, we'll walk for 10 minutes so I could read the chat safely and not run into a cab while I'm reading the comments. Yeah, Roy S is like, has the skateboard grown too? It has. Well, the good news, everybody, Bryant Park is open. Usually, Bryant Park is just closing up by the time we get here. So I think we'll take a quick walk around. This is one of my favorite places in the entire city, right here, Bryant Park. Pixelogic says, Tom, what's the significance of the Empire State Building? So in terms of the color, I'm not too sure, to be totally honest. I'm not too sure of the color, why it's blue. I should probably look that up before I start streaming though. Hey, Ben says, have you read about Black Rifle Coffee lawsuit over their stock manipulation? So no, I have not. I have not, but I believe the Black Rifle Coffee Company is a SPAC. if I'm not mistaken. So a special purpose acquisition company. You guys all know what I think about SPACs, but Black Rifle Coffee, I don't really want to go into, I don't really know too much about it, but it's a new issue, and I think it IPO'd via, well, that doesn't make sense. I think it went public via SPAC. And if you guys read the Behind the Street newsletter a couple weeks ago, you'll sort of understand what I think about the SPACs. So everybody, beautiful night here in New York, overlooking the One Vanderbilt, but even better. So this stage that is set up during the day, there's going to be live concerts. It's going to be fantastic. Hey, Gregory says, when will the grass be open? I think it's open. I think it's open, but let's, we'll do a lap around here to see if it's open or not. James says, blue for the Covenant House. Got it. MBA Elias says, Tom, many MBAs will happen, or many M&As will happen in tech later this year. VMware and Broadcom will start the parade. So MBA Elias, interesting you mentioned that. You know, if we talk about deal flow or deal activity, and I'm not sure if EBITDA is in the chat tonight, but if we talk about like deal flow in terms of the IPO market last year, there was a crazy amount of deal flow. And I think that is essentially, the spigot is totally shut off now in relation to that. But something that was very telling from Zoom's earnings call today, ticker symbol ZM, their CEO, or their CFO essentially said the vast majority of their forward growth is not going to come from their traditional business. It's going to come from M&A. And that's actually not good news, because if you think about a lot of companies who become mature enterprise software companies, the majority of their growth then turns to acquisition, right? Because there's only so much money you could pour into research and development to come up with a new product or a service to then sell to your existing base. That's called farming for anybody who's in enterprise software sales. So you could have a base of accounts, in which case you could farm them and sell existing products and services. The only problem is some companies only have one product or service. So with the additional cash flows of that business, they can go out and then acquire other companies. Perfect example is this company right here, Salesforce. Mark Benioff's company acquired Slack, formerly publicly traded company under the ticker symbol WORK, W-O-R-K. So what'll happen then going forward, they'll say, oh, we increased our revenues 40% quarter over quarter, or excuse me, year over year. But then in the fine print, it'll say 30% of that growth came from acquisitions. So it's like, okay, how much of that growth was actually organic in relation to how much of that growth was just from buying that growth via acquisition? I actually used to work for a major company that went through an acquisition. It's not fun, and it actually damaged the company and killed the morale. But sometimes you'll get a pretty nice cash out, especially if you own some equity. But everybody, we're going to do a quick break here. So give me 2 seconds. I apologize. MBA says, hey Tom, the price is said to be 50 to 70 billion for VMware. Wow. So I used to sell a lot of VMware products back in the day. I used to sell a ton of VMware Workspace ONE. I'm not sure if anybody's familiar with that product, but I sold a lot of that product. Hey, Chris Beeman, good to see you. Mohammed is here. Says, hey Tom, it's Mohammed from Malaysia. Always a pleasure to have you here, Mohammed. Good to see you. Red Baron says Walmart is looking like it might be a buy when it bounces. Well, maybe we'll see. Sorry, buddy, I got to get some water. But tomorrow, everybody, we will be back on our regularly scheduled programming with the Behind the Street newsletter. So if you're new here and you want to scan the QR code and be up to date on my thoughts on not only the US equities market, but the emerging markets, fixed income, the housing market as well. If you scan the QR code, punch in your email, you will be signed up to receive our free Behind the Street newsletter written by myself. It does come out every Tuesday, depending on if my work is hammering me or not. But I promise we are now back to our regular scheduled programming. So scan the QR code, join us everybody, and I appreciate the support with that. And on that note, we can continue on our walk/skateboard stream through the city. But we are at Bryant Park. So James says Costco is becoming attractive too. Well, here's the crazy thing. On a PE basis, and I really am not one to really look at PE ratios. I know it's going to come off bad, but I've explained it multiple times in other videos. But on a price to earnings basis, Costco is actually trading at a premium or a higher valuation in relation to price to earnings than some software companies now. Isn't that crazy? That's just how much valuation crush or valuation compression has happened. Pretty insane. So if you guys look at this camera right here, if you actually go to the Bryant Park webcam, you could actually see me live on the stream. Hey Kurt, what's up? Hey everybody, we have the Mighty Bull in the chat. Always a pleasure to see you, Mighty Bull. Hope you're doing well. So, for everybody who's just joining, we were talking about briefly how Snapchat, the CEO of Snapchat, at the JP Morgan conference came out and said that they are going to revise down their forward guidance in terms of their EBITDA projections as well as revenue projections. And on the back of that news, Snapchat cratered 20%. But what was even more interesting is Twitter was down, the Trade Desk was down, and Alphabet was also down off of that news. So, we briefly covered this. This could be the start of what's called a cockroach theory. If anybody's familiar with that, the cockroach theory, where essentially if you see one cockroach in the kitchen, there's probably 2 or 3 more behind the counter. And I think that now that Snapchat is coming out and saying, hey, we're taking down our revenue guidance, we're taking down our EPS guidance, you're probably going to see that across the board at major companies. And what happens then is they start to roll back on their hiring, they start to fire people. And what happens, it's just like the market, the garbage goes first. So we saw this in a lot of those speculative special purpose acquisition companies. Then we saw it with a lot of the speculative unprofitable growth companies like Peloton announced that they're laying off thousands of employees. We saw this with Carvana. We saw this with Vroom, ticker symbol VRM. And now I think you're going to start to see it roll out across the board in some of the more quality names. So I think a lot of the FANG names are announcing a hiring freeze. They're not announcing any layoffs, but they are announcing a hiring freeze. So just be cognizant of that. I think I have to change my camera. Sorry about that, everybody. I think I had you looking at the sky. Hey, Samit is here. Is anybody using the Hampton Jitney? I think the Hampton Jitney takes you to Southampton from Manhattan. I don't think I've ever taken it, but I used to have family that lived in Southampton. Well, I should say Watermill. Who dat Dave says Tom, Target and Walmart got hammered. Indeed they did. We were just talking about that. Dutchman, good to see you. Hey Laytha, welcome. Since I took the Jitney years ago, it takes as long as driving does. Yeah, so Laytha, It's so crazy because for anybody who's familiar with Southampton, there's literally one road that goes in and out of the Hamptons. And especially when the golf tournament is going on, the traffic is horrible. It's like a nightmare. Especially for the locals who live there too. Hey, Dow Jones is here. It says, peace. Good to see you, Dow Jones. DowJones.eth. Always a pleasure to have you here, Dow Jones. We were just talking about Zoom reported earnings and Snapchat. Old scary world says, Tom, do you think MySpace will recover? You know, maybe it could be like a trendy type, like hipster thing, perhaps. You know, as this came up one time before on the stream, and as a gag, I tried to create a Walks in Wall Street MySpace account, and for some reason it wouldn't let me because I wasn't going to upload any music, and I don't make music, so I don't know. But if you do want to follow us, everybody, on Discord, feel free to join us in the Discord. Ooh, look at this. We have to, we're going to do a kickflip over the trash. Kurt's like, Tom, that kickflip was so smooth, we didn't even notice it. This is my favorite part of the stream. All right, Herald Square. Hey, John, what's up? John says nobody does it better than Tom on the Empire shots. Thank you, John. You know, I'm so pleased that it is beautiful outside. I feel like it has been far too long since we've had beautiful weather here in the city. City shows like I'm putting my helmet on for this part. I'll have to put my helmet on too. All right, so we've already been streaming for about 2 hours, so I think it's appropriate that we head to Koreatown. So we covered the topics, I think, in pretty good detail. So for those of you who are joining, if you want to join in on that conversation, feel free to rewatch the stream. But until then, we have to head to Koreatown. Okay, West 33rd Street. Yeah, Mohammed says, Tom, looking forward to seeing you in New Jersey tomorrow. So I think I may go to Jersey City either late tomorrow night or if it's not late tomorrow night, it's going to be very early on the 25th. So to be determined on that. But we will be in Jersey City. If that means anything to anybody. FredX says, K-Town, here we come. You know, maybe we'll go down one more. I wanted to go down this way, but looks like we got caught at the red light. Also, everybody, let me know how the wind noise is coming out on the stream, because usually with the skateboard, the wind noise is really bad. So just keep me up to date on that. Everybody's like, I've heard zero wind noise. Well, that's good because I do have the microphone in, which is definitely good news. All right, so 32nd Street, Koreatown, or I should say Korea Way, technically. I think it's safe enough to skateboard down here. Usually they close off the street during the weekend, but during the weekdays, we may have to dip and dodge out of traffic. Like this. All right, 5th Avenue. So this is Love Korean Barbecue, but there's actually a better place right next to it called Baekjeong, right here. It's my favorite place in the city. Okay, Madison Avenue, East 32nd Street. But we'll walk back this way so you guys can see my favorite Empire State Building view. Hey, Cynthia Beal, thank you for joining. Have a good night. Yeah, City Shows is hard to find anything for 99 cents at the 99-cent store anymore. Yeah, well, Dollar General, I think, announced that they're raising prices. Hey, Talvish is here. Good to see you. Latha, you're correct. I did just want to walk past Five Guys. Latha's like, Tom just wanted to walk past Five Guys. You're right. Hey, Fadir Muhammad, welcome. This is good night. Good night to you too, sir. So this is my favorite Korean barbecue spot in the city. It's called Baekjung. Love is a pretty decent spot too, but Baekjung is definitely at least my favorite in Koreatown. And I think it is garbage night as well. But here is what we've all been waiting for, everybody. I think this is top five views of the Empire State Building. What do you guys think in the chat? Let's, on a scale of 1 to 10, I think this is like a 6. What am I talking about? This is a 9.6. 9.6. Kenny with the 7 out of 10. Low score, Kenny. But I respect it. James says you don't need reservations in Koreatown. That is true. Although a lot of the times at Baekjung they make me make one. Andy with the 8.2. Okay. Ryan Royal says 20 out of 10. Appropriate. Soho. Hey, Soho guy is here. This is 9.88. Soho, did you wind up selling your loft? I don't think you ever let us know about the update. Did you get that sold? Did you ever get that deal done or what? What's up? Ruby says 9 out of 10. Beautiful angle and no obstruction. I agree. It's one of my favorite views of the Empire State Building. British Grey is here as well. Well, thank you everybody for joining me on a Monday night. I know you guys are busy. But on the first skateboarding stream back, it's not going to be a true stream if we don't go to Madison Square Park. So once the light turns red here, we will be headed downtown, going to Madison Square Park. Hey, Finger Lakes, New York says kick, push, and coast. Love that. Raul Roca says, hey, buenos noches, everybody. Buenos noches to you. And thank you for being here. All right, Madison Square Park time. You know, I like to wait for the red lights now. I'm not as young as I used to be, so I can't be as daring whizzing in and out of the cars. I'm starting to get old and archaic here, so we have to skate accordingly. Somebody says, who has the best donuts in the city? Well, I mean, if you want to extend the city out of Manhattan, there's actually a really good place in Greenpoint called Peter Pan Donuts. Very famous, very good. Ooh, that was a big curb. That was a big one too. All right, pit stop to check out the view. I give this one 9-7 view. Claris is moving for your career. What do you mean? Lay this, that's pretty nice too, it is. Gigi says, I love the blue. I think it's for the Covenant House. Tin Man is here, welcome. City Shows is Peter Pan Donuts. Yes, I think it's considered Greenpoint, Brooklyn. If you go to Greenpoint, Brooklyn, I actually used to live right across the bridge there. Blanking on the name of the bridge. Maybe photos from around New York could help me out with this, but I would have to take the 7 train. I don't know why I'm blanking on the bridge. Anyway, I would take the 7 train to Vernon Jackson Boulevard and then walk across the Pulaski Bridge. There we go. I would walk across the Pulaski Bridge to Greenpoint, and my house was literally, or the apartment, it was the first place to your right as you go over the bridge. Really nice neighborhood, very fun in the spring and the summer. Not so fun, I don't know if I could say the same thing. What's it called? In the winter. Yeah, Dutchman, you're right. Thank you so much. It is my birthday on the 25th. I appreciate that. Thank you. You are way too kind. So once we get to Madison Square Park, we'll jump back on the board. Or we might jump on it here. Yeah, photos from around New York, that is it. The reason why I say it's not a lot of fun in what's it called? The winter is because it's crazy cold walking over the bridge in the winter. And it gets a teeny bit old after a while when you do it every day. You know, I always say there was nothing colder than when I had to take the 2 train to Wall Street every day for work. I did that for about 3 years. And I don't think there's anything colder than working in Lower Manhattan. Right on 82 Wall Street, right next to the Deutsche Bank. But it's a beautiful location during the spring and the summer. That's for sure. All right, well, change your plans, everybody, because Madison Square Park is now closed. So we're gonna have to make do here. Let me know if the camera lens goes out of focus as well. Hey, Marjan Worldwide, thank you so much for the $2 donation. You're my friend. This is Donut Pub, 14th Street and 7th Avenue. Check it out. 14th Street and 7th Avenue. This is 23rd and 7th. Maybe we'll check it out tonight. Hey, Marcelo is here. Welcome, Marcelo. Good to see you. But Marjan, thank you so much. I really, really do appreciate that. You know, I think we have some time. Maybe we'll go check it out. We'll go check it out. All right, off to 14th. Everybody put on your knee pads. Put on your helmets. Yes, Ruby, even you still have to wear the helmet, even though you've been here a long time. Marjan Worldwide, thank you. Appreciate it. Thank you for another $2 donation. Very nice. I appreciate all the support. Wow, these roads are so well paved. I remember last year they were horrible. Doom, doom, doom. All right, here we are. 17th Street, Union Square. Hey, Sherry Rodrigo. Says, hey, Tom, looks like you're a fan of the Rat Pack. I saw your pictures on IG. Huge, huge fan of the Rat Pack. So Sammy Davis Jr., Dean Martin, all the greats. I think the reason why I like them so much is because they know how to put aside, well, obviously way back in the day, like you could have a laugh with somebody, have a great time, and not have to worry about what you say, if you're gonna get canceled or deleted. Sammy Davis Jr., Frank Sinatra, Dean Martin, they just worked off of each other so well. And I think that's really special to see. I don't know. That's just how I could explain it. And also extremely talented people. I mean, you can't get more talent than Sammy Davis Jr., Frank Sinatra, Dean Martin. I mean, that's real talent. I mean, anybody could skateboard around the city and talk about finance. But when you want to talk about real talent, that's the Sammy Davis Jr.'s of the world, the Dean Martins, the Frank Sinatras. Yeah, so check him out. Anybody who's not familiar, please check him out. All right, so this is officially Union Square. Hey, Marcelo. So Marcelo's here. Marcelo, I believe, works at UBS. So we actually just, about an hour and a half ago, we passed the UBS on the stream. Speaking of big investment banks, JP Morgan Chase had their massive conference today, in which case Evan Spiegel, which is the CEO of Snapchat, came out with a wrecking ball, saying that they are going to come up short on their EBITDA projections as well as their revenue projections, tanking the stock 20% after hours, bringing down Twitter as well. But right now we are at Whole Foods. I think Michael Welch Jr. is the manager of this particular Whole Foods. So Michael, if you're in the chat, good to see you. Be blessed, as I remember driving to the Pocono Mountains with my grandmother, and she would play Frank Blue Eyes All the Way. That sounds fantastic, beautiful. Hey, Ryan Royals is there. Awesome Rat Pack concert on YouTube. I believe so mind-blowing. So mind-blowing they have you rolling with laughter, I know. Yeah, I think I've exhausted every single rerun or archive of the Rat Pack on YouTube. Somebody's asking me about Advanced Auto Parts earnings. I apologize, I wasn't able to make that call today because I was so preoccupied with Zoom. So for those of you who are just joining, the first 2 hours of this stream we actually covered in detail Zoom's earnings report, ticker symbol ZM. So maybe tomorrow we'll briefly touch on Advanced Auto Parts. But I think the biggest stream is probably gonna be Friday. We're getting a lot of key economic data on Friday. Hey, Claris, is Tom. What's more important to you, money or happiness? I think those things may be incongruous. Does that make sense? Incongruous? Let me know in the chat if that doesn't make sense. Hey, Tortellini, what's up? Good to see you. But to answer your question, you gotta, it's very, very important to have your own personal financial house in order so you don't burden other people. Because when you have your own financial house in order, and then you could help somebody else, right? So it's sort of like whenever you get on an airplane and they say, you know, if we're going to nosedive into the Atlantic, we're going to drop down the oxygen masks. You got to put yours on first before you put somebody else's. I think it's the same thing with finances. Because if you have your personal finances in order, well, then you could go help somebody else. You don't have to burden really other people. And I think it really, the analogy I'm giving is more along the lines of like family issues. I think the number one cause of divorce in the world is money issues. So I think if you can be on the same page with somebody, be fiscally responsible, I think you're probably going to have a more structured, organized, and philanthropic life, I believe. Somebody's saying, Tom, do you ride the skateboard standard or electric? So this is just a standard kick skateboard. I'm not really that much of a fan. Hold on, we're gonna stop here for the light. I'm not gonna take a chance. I'm not really much of a fan of the electric skateboards, to be honest. I'd much rather have the regular, regular skateboard. Hey, Ramsey is here. What's up? Good to see you, Ramsey. Hopefully you're having a good evening. Hey, Lady O, what's up? Lady O is our moderator from New Jersey. So Lady O, I'm actually going to be headed over your way pretty soon. I have to go to Atlantic City. So I will be in Atlantic City, New Jersey pretty soon. But yeah, it's nice to be back on the skateboard. We're coming up on the tail end of the stream here, but I had a good time. I had a really good time. And I thank everybody for joining too. Washington Square Park. So since we're near Washington Square Park, we might as well just go in. I mean, unless you guys don't want to. But I think we should probably go in. All right, I'll ride the skateboard. You guys be on the lookout for rats, so I don't run over any rats before the big trip. Wow, we have the fountain up. Very cool. So the skate park is no longer up. I call the fountain the skate park because everybody skates in the fountain. But now that it is in operation, looks like the party's over for all the skateboarders here. I hope these people don't have their feet in the fountain. Oh, they don't. That's good. Hey, Miami Walking and Driving Tours. What is up? Happy Monday. Hope you're doing well. Yeah, he says we get around the city so quick. Yeah, I mean, on the skateboard, you know, if we usually go the distance, which is a 3-hour stream, we can usually go about 30 miles. Yeah, James says they never used to have the fountain on. I think they probably turn it on right around Memorial Day, so right now. But in the winter, you could see everybody skating here, which is kind of cool. Geraldo says it's just unnerving to ride the subway nowadays. Yeah, there was a major incident with somebody who worked at Goldman Sachs. Really, really horrible. Hey, the ABX girl is here. Good to see you. Yeah, Ryan Royal's like, no rats allowed, only the Rat Pack. It's a beautiful night in the park though, everybody. Geraldo says, yeah, Tom, on the Q train, I ride it to work. Yeah, I mean, everybody, you just have to be really, really aware of your surroundings. But even then, I mean, what happened to the Goldman Sachs employee was such a tragedy because at the end of the day, there's only so much you can control. If there's a crazy person on the subway with a gun and he just randomly shoots you, there's really not much you could do. And the thing that really made me the most upset about that experience is the guy had 9 priors. I mean, what are we doing? I don't want to get too political. I could go off on a tangent, but I mean, I think that's, if I were the family, I would sue the city of New York because that guy had 9 priors. I mean, what are we doing? But let's digress from that. Mohammed, welcome. This is a nice night in New York City. I want to come over, but the plane tickets are expensive. You know, the tickets are expensive. So I was looking at a ticket to Korea, over $1,000 one way. It's kind of crazy. I mean, this time last year, they were going for like $570. It's almost a 100% increase. So if you look directly ahead, you could see the World Trade Center. Wow, they really got to clean up the park though. There's a lot of debris. We're sure to see some rats over here. You know, I think that is called Krav Maga. I think there's a terminology for it. It's actually a martial art. It's very good for your mental health. All right, we are near NYU. Congratulations to all the NYU students who have graduated. Big accomplishment, that's big stuff. Love that. This guy's gonna blow the stop sign. All right, East 4th Street. G Girl, good to see you. Yeah, Lady O. This is overseas. Flights are crazy expensive, agreed. Hey, Adam is here. This says, hello Tom, greetings from LA. Do you ride regular Goofy or Mongo? We ride regular. What about you? Ooh, guys, it's raining. Now we gotta head back uptown. But don't worry, I'll take you guys with me. I would never let you guys walk. I would never let you guys walk all the way back to Penn Station. I'll give you guys a ride, no worries. Ooh, it's gonna come down really hard, I could tell. But for those of you who are just joining, we covered Zoom's earnings report as well as Snapchat at the JP Morgan Investor Day. So if you guys enjoyed the stream tonight and you want to join us here tomorrow, feel free to leave a like on the video and subscribe to the channel if you are new. We'd love to see you on the skateboard for some more live streams. Somebody says, Tom, is it cold? It's not too bad. So I won't be reading the chat as much, everybody, because I want to try to beat the rain. So please forgive me if I am not reading the chat, but we got to pick up the pace. I'm not sure if you guys remember, this all used to be horrible. They paved it really, really nicely. So that's a plus. Ramsey, no, I am not. Whew. Quick break. This is actually a really good taco spot. I forgot how much faster it was on the board. And the rain is just coming down. Close call there. Whew. Appreciate it, Ruby. I think we'll make it. I think we'll make it. All right, coming up, Empire State Building, and I think we'll make the light. Okay, 5th Avenue, 23rd. Hey James, good to see you. CSRX, welcome my friend. Hey, Andy is joining us from South Korea. What's up? Hope you're well, Andy. The world still is the same. till some. Hey, Shot by Scott, what is up? Good to see you, Scott. Shot by Scott, Sunny Isles Beach, Florida. One of the most beautiful places in America. All right, now here comes the obstacles. Ta-da-ta-da. Let's see how we do over this. Ooh, not too good. Big bump. All right, 28th Street. Hey, Michael, welcome. Yeah, Ladios has watched the big bumps. That one took a couple of years off my knee for sure. I think I'll stop. Whew, those were 3 big craters in the road. All right, 31st Street. We're making good timing. We'll stop for the light. Jay says, hey Tom, how high can you ollie? I don't really do tricks, to be honest. Back in my heyday, I could ollie pretty well, but right now, not good at all. Shot by Scott is like Tom has 2 giant batteries attached to his hips, his legs. So let's see if we could see another beautiful view of the Empire. Let me know what you guys think. Drop the rating in the chat on a scale of 1 to 10. I'd say this is about maybe an 8.3, a little bit unique, kind of a unique view. It's not really like a bang-on accurate view, but it's unique. 8.3, solid score. I've seen a lot of 10 out of 10s. Okay, we're almost back at Penn Station. And I think I'll literally just make the train too. So I appreciate everybody joining tonight. We covered a very good topic of conversation. We covered Zoom video, their earnings reports. We also covered the JP Morgan Chase conference today. We talked about Snapchat, and we also covered how interest rates affect stock valuations. So I'll see you guys here tomorrow, 8:30 p.m. Eastern Standard Time. To be determined if we'll have the skateboard or not, because I think it may rain. But I appreciate everybody joining tonight. I hope your week is off to a fantastic, fantastic start. Feel free to leave a like on the video if you enjoyed the stream tonight, and subscribe if you are new. Marty Lewis, thank you for joining. DW, Samantha R, Clara, Johnny, thank you so much. Tin Man, Mohammed, photos from around New York, Fred X, Samantha R, Roy S, Shot by Scott Latha, Michelle Cunningham, thank you. Everybody be safe, and to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. And I'll see everybody right back here, 8:30 Eastern Standard Time tomorrow. Take it easy.